Jay Powell is in the hot seat. That's our top story today on the Wall Report. I'm your host, Greta Wall. Fed Chair Jerome Powell is appearing for his confirmation hearing in the Senate Banking Committee today after being nominated for a second term to lead the central bank. Today's questions have focused mostly on the Fed's monetary policy as they work to address inflation. Powell reiterated the bank's plan to end asset purchases this year, raise interest rates, and begin the reduction of their balance sheet. He wouldn't stray from the current forecast, which shows 3 rate hikes this year, saying that was the median estimate among most policymakers. He said some do see 4, but the median is 3, and that's what he's sticking to for his messaging. He also would not give a timeline on when they would begin that balance sheet reduction, just saying that it could begin this year. Current expectations are for it to start in December, but some analysts are now predicting as early as July. Now, the major indices are mostly flat today. All 3, though, are up, with the Nasdaq rising the most. Tech stocks staged a major U-turn on Monday, and that recovery is continuing today in a sign that investors are buying the dip in some big tech stocks. Now, when asked why the Fed got their inflation forecast so wrong, Powell blamed the supply chain issues. He said the bank knew that demand would be strong, but did not expect it to be so centered in durable goods, things like cars, appliances, and did not expect the supply chain issues to persist for as long as they are. He said demand is expected to level off as the central bank lifts its ultra-accommodative policies. Now, his testimony comes ahead of the December Consumer Prices Report tomorrow morning. The Labor Department releases that data ahead of the market open, and it is expected to show prices surged 7.1% year over year last month. That would be the fastest pace of annual inflation in 40 years. And although Powell said he does not see the spread of Omicron denting economic growth significantly, the airlines are still feeling the impact of the spread. United Airlines CEO told employees the company is cutting its schedule due to a surge in call-outs due to COVID. In that memo, he said about 3,000 United workers are currently positive for COVID. That represents about 4% of the airline's total workforce in the U.S. The airline has not publicly confirmed how many flights it will be cutting, but the move is meant to avoid last-minute cancellations that have plagued travelers since the holidays. Now, Tesla shares are up today following the release of some strong sales data on its cars made in China. The China Passenger Car Association, says Tesla sold 70,847 China-made vehicles in December. Now, that's the highest monthly sales total of its cars made in China since it opened its manufacturing plant in Shanghai back in 2019. That brings the total sales of its China-made cars to more than 473,000 in 2021. That's about half the 936,000 total that the automaker delivered globally last year. Now, Tesla makes both the Model 3 sedan and Model Y SUV at its factory in Shanghai. And Tesla's closest rival, Rivian, also released some new production data today. The electric truck maker says it produced 1,015 vehicles total and delivered 920 last year. Now, that did come in a little lower than the 1,200 that they had previously forecast. But when Rivian released their first earnings report as a public company, they did warn that they would fall a few hundred cars short of their previous production estimates, and that few hundred is looking to be about 200. Now, those vehicles were mostly the R1T electric pickup truck, but the company did also produce delivery vans for Amazon and a few of its R1S electric SUVs. The company did also announce that its chief operating officer has retired after joining the team in early 2020. Now, Robinhood has officially lost the first case related to its halting of meme stock trades in January 2021. Last week, FINRA ruled the stock trading app is liable for more than $29,000 in compensatory damages to Jose Batista. Batista was a retail trader who filed a FINRA complaint back in May, alleging he suffered significant investment losses caused by Robinhood's decision to restrict trading on certain stocks. The app infamously halted trades on GameStop and AMC last year, as the first big short squeeze of 2021 took hold. But Batista's case was focused on his shares in headphone maker Koss and fashion brand Express. Now, this is the first case in which Robinhood has been found liable. The app faced widespread scrutiny for the decision last year, souring the opinion of many who had previously seen it as the app of choice for retail traders. So, do you think this will spark more cases like this in the future? Let me know in the comments. I'll see you all back here for the Wall Report tomorrow, and you won't want to miss it. We will be talking all about inflation after that CPI report in the morning. Also, be sure you're subscribed to my Coffee with Greta newsletter to get all the details right after it's released and ahead of the market open in the morning. There's a link in the description box to sign up if you haven't already, and you'll receive it right at 9 a.m. Eastern. Be sure to hit that subscribe button and the notifications bell before you go.